It's work in progress on Twitter. Look, there were puts and takes this quarter. There were some clear positives here, and I think the most interesting one was the outlook for double-digit ad revenue growth in first quarter. The clear negative here was the MAUs, the monthly average users, which didn't grow sequentially. Now there's some negative seasonality in there. But this company has put in a lot of product improvements, including expanding the character limit from 140 to 280 characters. And yet we're not seeing it really show up in the MAU growth. And the open question for investors is we're clearly seeing near-term fundamental improvements. How sustainable are they? How long can this company grow double-digit ad revenue growth? And at some point, MAU growth is going to have to improve from current levels for that to be sustainable. And it's very unclear whether they can do that.
And I guess that's the question, Mark. I mean, when you see MAUs not improving and the checks that you have done at RBC on advertisers as sentiment toward Twitter pretty negative, is that why you continue to bet that this stock is going to, I guess, go back down?
Well, that's the open question now is, look, near-term fundamentals are clearly getting better. Our advertiser survey showed real deterioration in advertiser interest in the Twitter platform in 2015 and 16, real deterioration. It did show stabilization in 17, and we just don't know what the next turn is, whether it just stays flat or whether it actually improves. It improves, then you can be constructive on the stock. The question is what's going to cause that to happen, but I think it comes back to the user growth. Advertisers are not disengaging from the Twitter platform, and at the margin are shifting more budgets there because pricing has really come down aggressively at the company. Same thing is happening at Snap, by the way, right now. But Snap has the advantage of pricing going down and users still growing nicely. Twitter doesn't have that advantage. That's the big question mark here for investors. What's going to cause that MAU growth to reaccelerate? Without that, it's hard to see this fundamental improvement sustaining itself.
But Mark, love it or hate it, Twitter has President Trump, and one of the conversations we were having earlier on the show was the suggestion that maybe Twitter is experiencing a Trump bump. What do you think?
Oh, I don't think so. I've sort of wondered whether we would see that a year ago. And, we had 4% growth in MAUs for 3 quarters in a row. So I haven't seen the Trump bump. But there's no question. Look, this is a unique asset. It always has been. It's one that, there's competition, of course, for ad dollars versus Facebook and Google. The advantage that Twitter has, though, just from an ad dollars perspective, is the same one that Snap has. These companies are tiny. Snap is 1/100th the size of Google. Twitter is 1/50th the size of Google. So they can grow decently without even having to bump into those Goliaths, which are Facebook and Google. That's the advantage. It's almost like the advantage of having tiny market share. You can tweak the needle. You can improve fundamentals, and you don't have to worry about major market share shifts. At least for now. Eventually, that issue is going to come up.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.